It is Fulcrum Metals. It listed on Valentine's Day last year. It's focused on mineral exploration and development in Canada. It's advancing. It's environmentally friendly, and this is important, environmentally friendly tailings processing assets, Teck-Hughes and Silverite, and focusing on its drill-ready gold exploration projects in Ontario. Concurrently, it is identifying low entry-level assets and, of course, is crystallizing value for its shareholders. Ryan Mee is the Chief Executive. Good to see you, Ryan.
Yes, it's good to see you again, Sarah. And, just thanks to the previous presenters, enjoyed their slide decks. And obviously I'm here to talk about Fulcrum and what we're up to. Obviously everybody, standard legal disclaimer there. Now, just a brief overview of the company. So we are listed on the AIM market in London. Now, we do have a very focused business model. Now, we are primarily focused on transforming mine waste and tailings into sustainable resources and potentially ecological assets in Ontario. And that's through utilising extract process solutions, non-toxic technology. Now, importantly, no one is addressing these historic tailings in Ontario. And indeed, Fulcrum are not just the first mover in trying to address these tailings, but we're also the first mover with this technology in Ontario. As a second side to the business, what we are looking to do is leverage the portfolio of very exciting, highly prospective exploration projects that we have. And that's, as you say, to crystallize value and further opportunities to the business. We have demonstrated that we've come to market. Not only are we a capable management team, but we've also got a very good track record with M&A and deal making since we've come to market. Now, what are our short-term objectives for the company? What can people be excited about to look forward to? Now, in terms of the gold tailings, we have two projects roughly in the same area. We're going through phase development programs. Now, in the short term, we've already put news out on the phase one at Teck-Hughes, which was, we're excited about those results. But now we're focused on optimizing that leach testing and advancing into a phase two conceptual study. And of course, alongside that, looking at all the permitting. With Silverite, which we acquired a bit earlier this year, we are currently underway doing a phase one testing and sampling program, and that's so we get a representative sampling across the tailings body itself. So we're looking at the grade of gold, the content, and of course the leaching. And subsequent to that, we'll be looking at optimizing that leach testing. What we are doing to cement our position in Ontario is we are, under discussions with Extract and their technology and exclusive licensing of that in regions in Ontario. And part of our strategy there is also to establish a testing lab there in the heart of Timmins for reasons I'll discuss a bit later on. Obviously, with our remaining exploration assets, we're reviewing opportunities with regard to those. Now, if we look at the two sides of the business, so we've got the exploration assets. Now, we actually recently disposed of our Saskatchewan uranium portfolio at a very good uplift to the capital expenditures that the company borne. So over the term of that disposal of 4 years, we're looking at 3.36 million Canadian in cash and shares. And the Terra Balcanica, the company acquiring those assets, that committed to 3.25 million in expenditures. So that gets to leverage that expenditure over our investment in those uranium assets. We've also got two very exciting drill-ready gold projects. One is Tully, which is in Timmins. It's got an existing resource, and there's an incredible upside in terms of expanding that resource. And in actual fact, just about a month ago, a mine just a couple of kilometres north of Tully, which is 1.2 million ounces, is taken private in a $100 million Canadian dollar deal. So we know that's in the right area, and it's a very typical Timmins setting for a deposit for an expansion. We also have Big Bear, That is now we've identified drill targets, and that's ready there to go after a discovery. So they're both there for us to capitalize on. Obviously, the main focus of the company, and that's what I'll be focusing on for the rest of this this webinar, and that is, what about the tailings? Now, we are using non-toxic, innovative technology, and that's why it's sustainable. The tailings are already there. We're using non-toxic, environmentally friendly technology. So what does our asset base look like? So we've developed a Kirkland Lake tailings hub with a non-compliant estimate of up to just over 200,000 ounces of gold. We've got partnerships with Extract, who have a global, commercializing agreement with Bechtel. Bechtel are a massive, massive company. These are, $20 billion a year revenue kind of companies. They provide significant EPC expertise for us as we move forward. Our first phase sampling and testing, as I say, there were outstanding results. What we managed to do is confirm the gold grades were actually, what we came back with was nearly 17% higher than what the historic grades are. And we're hitting nearly 60% in terms of gold recoveries already straight off the bottom. And what we also know is, obviously, Ontario and Canada, it's a huge mining country, has been for over 100 years. So there's a multi-billion-dollar tailing target market for us to scale into. Now, what exactly are tailings? Now, every mine produces waste. These go into ponds or lakes or whatever it was at the time. Now, that production, that doesn't recover all the precious metals. So that means there's still some gold left in the tailings, and that's where our opportunity lies. And of course, it's a growing problem. Mining happens every single day. So those tailing stocks, they're always growing. And of course, in these tailings, you're going to have heavy metals and chemicals, and these leach into the surroundings. So that naturally leads to concerns from an environmental point of view, but also the structural integrity of these tailings as these get filled up. One of the real reasons why I love tailings, and that is the perceived lower risk. Now, we know that there's metals there. It's from historic mine production. It's very well documented. And we have the opportunity to extract these precious metals, but that's without this expensive diamond drilling operations that you need to outline a resource. So that, therefore, with the lower cost, the significantly reduced drilling programs that you need for that offers us a much nearer term opportunity for cash generation. In terms of the market in Canada, there's actually two sides of the coin here. From the environmental angle, the government have a huge liability to go and clean up these tailings. They don't have an answer for it at the moment. We plan to give them one. That liability is, over $10 billion. This was calculated a number of years ago. And then on the other side, in terms of the actual metals that we can extract from these tailings, Natural Resource Canada, they estimated, and this was about 6 years ago, for just the gold in these tailings, they're worth more than $10 billion alone. But the big snag with tailings is you need the technology that works. And that's why we're excited about the results that we've had so far. That's why we're excited about the extract technology and the opportunity. Canada is obviously, a mining behemoth of a country, one of the most significant gold producers globally. Now, Ontario actually accounts for nearly half of their gold production. As I've just said, the government is subject to this very large liability to go and clean up these tailings. Now, what we're doing is, we need a focus. So we're focusing on, established mining towns of Kirkland Lake and Timmins, where there's a significant past gold production, well in excess of 100 million ounces of gold over the last 100 years. What we also know is that there's over 400 tailing dams privately held around Ontario that the government have to monitor and come up with a plan to go and clean them up. So we've just got a little map here. Now, These are the two areas, Timmins and Kirkland Lake. And on here, what you can see is all of the active and historic or legacy tailings in those areas. Now, in those two areas, you're looking at around 20% of all of the tailings in Ontario. So this is why, you know, we've got these targeted areas. It gives us a very good focus area. Obviously, in Kirkland Lake, we've got 2 projects already. So what do these 2 projects look like? So they're called Teck-Hughes and Silverite. It's actually along the main break of the Kirkland Lake. It's actually where, you know, historically there's been 7 multi-million ounce gold production mines, all from the same ore body, which is quite incredible. It's produced over 24 million ounces of gold. Now, in terms of the historic estimates of what we believe or historically reported at these 2 tailing sites, is a combined nearly 11 million tons of tailings. And you're looking at, I think, 205,000 ounces of gold. Now, how do we move these forward? How do we bring these in from a concept into reality? Well, we have a phased focused testing program at Teck-Hughes, which is underway. It's a 4-phase program, which we're doing with extract. As I say, we've already completed phase 1. I'll go back, you know, I'll cover the results of those in a moment. And then you've got the phase 2, which is the conceptual study, the initial conceptual study, and then phase 3, which is a more detailed sampling and leach testing program. And that will lead naturally into a phase 4 economic study. Now, we believe that complete 4-phase approach we can do in around 15 months from start to finish. Now, in terms of Silverite, we have already announced that we have started that phase 1 process. So, you know, the samples have already been collected from site. They're on their way to the lab. So, you know, we look forward to the results of those. Now, in terms of Teck-Hughes, now this is about 6.5 million tons at 0.66 grams per ton gold for getting on 440,000 ounces. So what we've done is we selected a number of locations across the tailings body to give us a representative sampling across there. Now, what we've done is we cross-referenced the samples that we took with the historic, so we have a direct comparison. Now, we have an average weighted grade of just over 0.7 grams a ton. Now, when we directly compare those to the historic results, they're just over 0.6 grams a ton. So we're nearly 17% higher, and that could be really material for us. The second part of that phase 1 is, and that is the actual leach testing of the tailings material. So we made a composite of all those. We sent them, you know, we batch tested. So the initial unoptimized leach testing actually, you know, we achieved something quite incredible, actually. You know, 59.4% recovery rates. Now, what you need to understand here is this is dirt out of the ground. We have done no processing whatsoever to this tailings. We've done no treatment whatsoever to this tailings. We have simply poured it out the ground, composited it up, and we've done our initial batch test leaching. And don't forget, you know, Teck-Hughes, no one's ever done this before. There wasn't even any metallurgical information about this tailing. So we've done all of this from scratch. So to actually to be able to go from a cold start where no one knew anything apart from we know there's gold in there, we've got a really good understanding of the tailings now. And we've achieved an outstanding initial gold recovery rate. For you know, just for comparison, if you're looking for other kind of traditional methods of extracting this gold or recovering this gold from tailings, you're looking at 35 to 40% max. So we're already clearing the benchmark that we already set out for ourselves. And indeed, you know, optimization, leach testing is ongoing at the moment. We'll probably continue to run that alongside the phase 2 conceptual study. Now, why do I believe that we've got an you know, economically viable project? Now, fortunately, there's tailings all around the world, so there's other DFSs that you can look at. Now, a fairly closely comparable project is one out in Western Australia. It's called Windara. That a DFS published in 2021. Now that 5.5 million tonnes, 150,000 ounces of gold, but they could only recover just under 54,000 ounces of gold. And like I say, other technologies, you're getting 35, 40%. So you can clearly see they're getting around 36% there. But even with that, they've got a very positive investment rate of return. They've got, fairly, for the size of the deposit, they've got very impressive, operating cash flow there. And ultimately, we believe we've got the best technology out there in the market. Now, why are we so confident? Well, the real key to this is all in the IP. It's in the chemistry. It's not in the machinery. The machinery is, is very bog standard. It's off the shelf. That's why the technology works so well. And also, further down the line, it's going to give a lot of other benefits because it means we don't need to go and buy specialized equipment, which is A, costly, and B, takes a long time to arrive. I've known Extract and the principles of Extract for quite some time now, and they've put a lot of money into the R&D of this technology, making constant improvements and adaptations, and that will just continue. And this is very novel, simple separation technology. Now we're focusing on gold. Now, we need a very focused strategy to be able to penetrate into the market in Canada. So we focus on gold very purposefully. We focused on the area very purposefully. But what we do know is that actually this technology works on a variety of different metals in complex oxides, both refractory and non-refractory. And also actually, separating hydrocarbons from oil sands. So we're getting, partnered up with some serious technology. And of course, the technology also needs to have some benefits to the environment. Now, there's some very strong ESG and environmental implications with this technology. It's non-toxic, it's non-cyanide, it does not give off any residues which are inert, it's non-acid generating. It's actually got very little water consumption, which can prove vital to the survival of any mining project. And we know that, through testing in various situations, that this can dewater the tailings for dry stacking, which directly addresses those issues of stability of dams. Now, I appreciate Extract is a private company, and there's not a whole lot about the technology on the internet, which is a question I get all the time. Now, but if you focus on the information that is available in the public market, and of course, as we develop our projects, we'll be able to divulge more information on that, particularly as we do the phase 2 conceptual study at Teck-Hughes. Now, what we do know is Bechtel are a multi-billion-dollar annual revenue company, and they signed a global commercial alliance with Extract to take the technology all around the world. And the president of Bechtel, he said, this collaboration is going to transform the industry. It's words that should not be taken lightly. It's words that should be taken on board, especially when they look at Fulcrum and the opportunity in front of us. And there is another publicly listed company out in Nevada who've just completed their phase 1 study. It's an operating mine. It's a silver. It was uneconomic because of the low recovery rates. But what this technology has shown is that they can double the recovery rate and make it economic once more. And that's, not just the recovery rate, but significantly cutting leach times and ultimately reducing costs.
You've got 1 minute left, Ryan.
Yeah. Okay, so I'm going to very quickly try and wrap this up, but this is a significant opportunity for Fulcrum shareholders to transform mine tailings into sustainable resources. There's a number of environmental benefits, regenerating nature, potential to reduce the carbon and waste pollution footprint, but also to the local economies. So we're about to bring new sustainable resources and job opportunities to the table, but importantly, enables the reconnection of local communities, governments, and investors that are increasingly demanding this more mining, biodiverse, and environmentally and climate positive change. Very simply, through our model of having a testing lab in Timmins, which would only be the second one globally, that's going to open up a key access point throughout Canada, and of course, a lot of commercial opportunity. That in itself will lead to commercialization and cash flow potential in terms of our own projects, but also being able to bring other companies' projects through the door into the lab, and and there's going to be further commercial opportunities for us on that front. So, in summary, Fulcrum in a very short time of building a tailings business. We know we've got gold. We know we've got exceptional partners in terms of technology and engineering. We've got a number of deals which is going to help us cement that position. So we're really primed for significant commercial revenue opportunities in a truly multi-billion-dollar industry. The exploration side of the business, we've shown that we can do M&A deals through the disposed of the uranium assets. We've got two really exciting gold assets as well to review the opportunities for. And I think that's me done, Sarah. So I'm happy to take any questions.
I was going to say, we're not quite done with you yet. We saw you go all doe-eyed when you talked about tailings. You're a self-confessed tailings man, and I now understand about the potential. But you fell out of love with uranium. You've told us that you achieved, a decent uplift when you sold the uranium assets in Saskatchewan. But are you limiting the company, do you think, by focusing on one area only, and just because tailings are close to your heart?
Absolutely not. We said from the get-go, uranium was an industry which, we've seen the direction of travel in that industry with net zero. So that was an investment to be able to crystallize significant value for shareholders. It was never our primary objective, but what we have done is ultimately been able to close out a fantastic deal for shareholders. And actually, it's one that means that when we haven't exited the uranium trade, inverted commas, but actually we've leveraged the position whereby we don't need to spend any money on those uranium assets. We're using someone else's balance sheet. Those expenditures that are committed to spending, that's going to directly leverage, I think they're going to be very successful. I really like those uranium assets as it happens. So I see us delivering a lot more value from that uranium investment. Now, yeah, I love tailings. Literally, we talk about scale. You can either have project scale or you can have industry scale. Now, it's the industry scale which really excites me. And we've got a business plan set out in front of us, which I think that is going to enable us to not just be first movers, but be a fairly dominant tailings company in Ontario going forward. I think it's the scale or the potential is it's get your calculator out kind of stuff, but I know that we listed as a pure exploration company, but it's our job, not just as the board. Don't forget, I own nearly 14% of the company. So these decisions aren't taken lightly. Sometimes you've got to be brave. That's what we have been. But hopefully investors can see the size of this opportunity in front of us, because it is, like I say, it's not about project scale. It's about industry scale. It's about repeatability.
Okay, so you love tailings. You are, in essence, the consummate recycler of precious goods. But let's talk about another relationship, the relationship that you have with Extract. It doesn't sound exclusive. It sounds as though Extract has got alliances with other companies. Now, what would happen if your agreement, your partnership with Extract came to an end? What would plan B be for Fulcrum?
Yeah, look, I mean, let's just kind of explore what those relationships look like at the moment. So obviously Extract and Bechtel, they're going around all those major mining companies all around the world, Australia, Central Europe, North America, South America, and not exclusively gold. they're looking at iron ore, they're looking at lithium, they're looking at silver. So a whole myriad of things are going on there. What that means is that Fulcrum have an opportunity to actually bring a very synergistic opportunity to, let's call it the wider group, i.e. the three companies. Don't forget, Extract are an IP company. They want this technology out there. They want it deployed. They want it developed. Bechtel, they're an engineering company. Neither of these companies are interested in owning projects at all. Bechtel want to go and build plants. So what Fulcrum are doing is putting a business model to them to say, hey, we've got a very good idea. We've got very good contacts in the industry now, which are always expanding. And ultimately, this isn't just we've just come up with this overnight. We've got a pre-existing relationship there, and it's taken us 8 months to in these discussions so far. So if anybody wants to come to the table, then they've got the best part of 8 months catch up plus a lot of inbuilt trust and confidence between the three groups.
Okay, so the non-toxic technology, it works. You've given the evidence there. So you have this smorgasbord of base and precious metals. Where do they go once you find them? What's the protocol? What's the system? Who's going to take them off you?
Well, look, ultimately, we will reprocess the tailings through a plant on site. Actually, the interesting thing about, in particular, Teck-Hughes and Silverite is they're less than 3 kilometers away. So there should be some synergies for us there to actually reduce the costs. But essentially, we will reprocess the tailings. We will come out with something which will then be sent off to be, we might concentrate it on site, but we're not sure on that just yet. It depends on what the economies of scale look like. But this is dirt. We're ultimately separating dirt from the metals. So, it's a relatively simple process as long as it works. We know it works. We truck it off to a refinery to get it smelted down.
Okay. You're essentially saving the environment, making things that don't leach into the ground. I'm just wondering if the First Nations, the First Nations or Third Nations and the Ministries of Mines in Ontario, are they supportive? Are they 100% behind you?
Look, we've had several meetings with both regional and provincial government representatives for in the mining industry. They've seen some of the data that we're coming up with. They're really excited. Like I say, no one's doing this yet. These tailings are sat there, and all that's happening is it's a case of let's not let them get any worse. They don't have any answers now. I firmly believe that we do. We've got significant support from the governments. They want us to be out there looking at these tailings. They want us to be out there bringing a new testing lab and this new technology to Ontario. First Nation groups, they, like I say, the tailings have been completely ignored. It's a case of as you are. Now, if you consider there's been 100 years worth of mining activity in Ontario, that's a hell of a lot of tailings, a hell of a lot of environmental concern for First Nation groups. So quite rightly, they're looking to, demand better of the government, better of operating companies. Through the discussions that we've had, they're clearly very supportive of what we want to do. They want to be part of what we're doing. Discussions are underway as far as that is concerned. So we're a very happy camp at the moment.
Very good. And very quickly, so legacy divestment of portfolio projects to date have been at a premium. Are you in any rush to divest your current assets?
Absolutely not. For example, Tully, it costs us less than $1,000 a year to maintain that property. I think that Timmins Tully property is very similar to Hoyle Pond. Started off 100,000 ounces, just like Tully, got on top of the vein stack, followed it down. That was in the early 1980s. 30 years later, it's still producing. It's 3.5 million ounces, year to date. So we don't want to let it go cheap, but at the same time, if we get a reasonable deal in the offing, then clearly it makes sense to look at to try and maintain some level of interest in that project, but also to reinvest into what is an industry scale tailings opportunity. We're under no pressure from in terms of Big Bear exploration either. We haven't talked much about Big Bear, but there's some pretty exciting drill targets on there. We developed a high-grade gold corridor. We've got a full set of high-quality geophysical surveys on there. It's a very good property. It really is. So
Another webinar. It's another webinar.
yeah,
But
perhaps.
yes, come back and talk to us. Ryan, I love tailings me. Thank you very much. Ryan,
I love the tailings opportunity, me.
I like that. I like it very much. And I'm hoping that the shareholders will too. Ryan Me, Chief Executive of Fulcrum Metals, thank you very much for joining us tonight. And come back and talk about the Big Bear project another time.
Absolutely. Thank you very much, Sarah.